Good evening, everyone. Hi. So, ready? Ready for the paper? Sure. I'm also ready. As promised to you yesterday, that today I'll be doing what? I told you. Audio okay? Audio video okay? Hi, good evening. Yesterday I promised you that I'll be doing what? See, I'll be taking LC. Then I told you Forex. Then the Rarok and Disallowance. Four things were there, right? LC, Forex, Rarok and Disallowance. Right? Yesterday I told you this. So yeah, accordingly. Yeah, Forex, LC, Rarok and Disallowance also. I'll take Disallowance also. Because I know this is an important topic. Disallowance. So everyone join fast. All of those kindly share it with your friends also. Those who are yet to join, kindly join fast. Okay? Because it's today will be very important session. These all four topics are sure questions in the exam. Sure. Okay? By the time others join, let me cover one numerical. By the time others join, let me cover one numerical. Let me see everything. Now you will have to solve this. This numerical, first numerical, you will have to solve it. Similar to that of yesterday, I took one. I took one numerical yesterday, similar, but this is not the same. This is different. Okay? So, everything is okay, visible. Numerical is visible. Chalo, let's start. ABC Bank has credit and operational risk of 5,000 crores. Here, yesterday's figures were different. So, answer will be different today. 5,000 crores and market risk of 2,000 crores. I told you yesterday that luckily you got some 200 was the answer. Luckily you got the tier 2 capital. Today let's see. Such numericals you will be getting in the exam. See this, I'll tell you, definitely you will get some numericals like this in exam. Okay? So market risk is 2,000 crores. Paid up capital is 100 crores. Free reserves 200 crores. PNCP 300 crores. Contingencies 50 crores. Changes. Yesterday's and today's numerical changes in the figures. Look at this. Revaluation reserves 200 crores. Subordinate debt 100 crores. Calculate the CRAR with CCB for ABC Limited. CRAR with CCB. Okay? So now you've solved it. Everyone try this. For apply same formula for yesterday. I'll give you the hint also. Not an issue. I'll be there with you. It's not that you solve it means completely you will be solving it. Okay? How should you approach this problem? First, how should you approach this problem? What do you want? You want CRAR with CCB. So CCB is 2.5%. Forget that. Leave aside CCB right now. Okay? Don't think about CCB. Only think about CRAR. What is the formula for CRAR? CRAR, those who are there yesterday, you will be able to solve it. But again, it's a refreshment. CRAR equals to capital upon RWA. Okay, capital upon RWA, right? Now I'll just give you the hint. We'll solve it later. Capital is what? Equals to tier 1 plus tier 2. RWA is what? Credit plus market plus ops. Right? This is your RWA. Okay? So you want calculate CRAR. You want CRAR. Okay? So this should be an approach. While solving any numerical, this should be your approach. Tier 1, somebody, Nivetha has got it, 590. Let's calculate tier 1 fast. Now all of you might be knowing tier 1. How to calculate tier 1? What is there over here? Leave aside this part. Paid up capital 100. So I'll just write it over here only. Let's do it fast. This is one tier 1. Then next free reserves 200 crores. This is again one tier 1. Right? Free reserves tier 1. Immediately write it here only. Why to waste our time? PNCP. Okay, what is this? 300 crores. Again one tier 1. Everyone, are you with me? Some of you might have joined new. Okay, so you might be finding it difficult today. Those who were there yesterday will find it easy. Okay, so it's simply tier 1 and tier 2. For the new guys, kindly note, we are just distributing it in tier 1 and tier 2. Provisions for contingency. This is tier 2, but this is a problematic. Provisions for contingencies, what did I say yesterday? Either given figure or what? You tell me. Either given figure or what? Or what? Either given figure or what? Everyone. Either given figure or what is it? Or. Either given figure or. Yes. Tomorrow is the exam. Tomorrow is the exam. So, provision for contingencies is either given figure or what? Yes, 1.25% of RWA. Very good. 1.25% of RWA, whichever is higher or lower. Whichever is higher or lower. Yes. What is it? Whichever is higher or whichever is lower. Yes. Whichever is higher or whichever is lower. Yesterday. Whichever is higher or whichever is lower. Yes. Whichever is higher or whichever is lower. Whichever is higher. Got it? Whichever is higher. Kindly understand, not lower. It's a provision. Provision is always on the higher side. Then revaluation reserves. Revaluation reserves are a part of tier 1, CET1. So this is taken at what? Revaluation reserves. These are taken at what percent? Revaluation reserves are taken at what percent? Everyone. Revaluation reserves are taken at what percent? Revaluation reserves at what percent? Yes? At what percent? Revaluation reserves. 45%. Correct. 55% discount. So 45%. So now you do it, everyone. And last one is there something subordinate debt. This is the part of tier 2. Subordinate debt tier 2. So this is full. So now do it fast. Do the calculations for tier 1. 100, 200, 300. Then what? 300, 600. Then 600 plus this. 45%. See, I'll write it over here. Where should I write it? Here, next page. Chalo. Tier 1. Okay? T1. 100 plus 200 plus 300. Getting this? Plus, what is it? Next. See this. Everything is added. 100. Then 200. Then 300. This is tier 2. Now revaluation reserves 200. And that you have to take it at 45%. So 200 into 45% plus 200 into 45% plus anything is there? Subordinate debt tier 2. Leave it. So everyone is clear on this up till now? This is a major numerical in exam. Major. 600 and this is 90. So 690. Are you getting it? 690 everyone. Are you getting it? 690. 690. Are you getting it? 690 everyone. Tier 1. Tier 1 should be 690. Are you getting it? Okay, now tier 2. What about tier 2? Tier 2 are what? What is there in tier 2? 1. Provision for contingencies, 50 crores or 1.25% of total RWA. So let's calculate that also. Now let's calculate tier 2. Tier 2 is tough. Tier 2. Now contingencies. Contingencies. What is it? Given figure, I'll write it. Everyone pay attention. Those who were not there yesterday. Given figure or 1.25% into RWA. Whichever is higher. Higher. Okay, don't forget this. So now given figure is what? Given figure is 50 CR. Right? 50 CR. So equals to 50 or 1.25% into what is my total RWA? Total RWA is 5,000. See this. RWA is 5,000 and 2,000. 5 plus 2. Pay attention everyone. 5,000 is for credit and operations both. Credit and ops combined it is given 5,000 and 1 is for market risk 2,000. So 7,000. Clear? 7,000. So do it now. Do it. Get the answer. What is the answer for this? 1.25% of 7,000. 1.25% of 7,000. What are you getting? What are you getting everyone? 1.25% of 7,000. Give me the calculations everyone. Give me the calculations everyone. So 7,000 into what is this? 1.25 upon equals to upon 100. So it is 87.5. So this figure I am getting it as 87.5. So whichever is higher. So I take this one. I will not take 50 now. That's why this problem is changed today. Okay, you should get it. Whichever is higher. So 87.5. Now what? Now what? So your tier 2 is what total? Tier 2 is 87.5 plus subordinate debt. What is subordinate debt? Subordinate debt is 100 CR. 100 crores. Okay? So add it. So plus 100. So it is 187.5. This much is your tier 2. Got it everyone? Tier 2 you got it? Now next. What is next? Total capital now. Tier 1 plus tier 2. Okay? Everyone, you should tell me now. I should not tell you. Tomorrow is your exam. You should tell me. Now what next? What should I do? You tell me in the comment section. Everyone type in the comment section. What should I do now? Tier 1 done, tier 2 done. What about next? Total. Total is what? T1 plus T2. So that is equal to T1 plus T2 is what? 690 plus 187.5. So what is the answer? You give me. Yes? 877.5. Okay. 877.5. 877.5. This is what? My capital. This is my capital. So what do I want? CRAR. Now what? You tell me. Capital is done. I want CRAR. So do I have the RWA? My RWA I am having it already. 5 and 2. Right? 5,000, 2,000. So RWA I have it. So write down the RWA. See this. My total RWA is what? RWA 5,000 plus 2,000. Right? 5 and 2 only, na? 7,000. So my total RWA is 5 plus 2, 7,000. Got it? So what is my CRAR now? CRAR equals to, what was this? 877. 877.5 upon 7,000 into 100. Get the answer. Get the answer. 877.5 upon 7,000. So I'll make it 70 only now. We have 100, you have to multiply. So what are you getting the answer? 12.53. Okay, 12.53. 12.53%. Okay, this is my CRAR, but is this my final answer? Is this my final answer? Yes, everyone. Let me see how many of you can judge it properly. Is this my final answer? Is this my final answer? Everyone, is this my final answer? Yes? Is this my final answer? All of you, let me see. Yes, Reshma, very good. Something is remaining. What is remaining? What was told in the question? What was the question? Check this. What is the question? The question is with CCB. So have you added CCB now? CCB is yet to be added. So your answer will be 12.53 plus 2.5%. So that is equal to, now do it. 12.5 plus this 13, 14, 15, 15.03. 15.03%. So this is my CRAR with CCB. Getting this? Got it? Correct, Nalina. 14 or 15? 12.53 plus 2, 14. 14.53 and 15 point, na, Nivetha? Right? 15.03, correct? Now you tell me, is this CRAR okay or is it less? Is this CRAR okay or is it less? Is this CRAR okay or is it less? Yeah? Is this CRAR okay or is it less as per RBI? Is this CRAR okay or is it less as per RBI? Let me see how many of you can answer this. Is this CRAR okay or is it less as per RBI? Okay? What does RBI say? Minimum should be what? Minimum should be what? Standard is 9. No, with CCB. Madhu, with CCB. With CCB is what? 9 is without CCB. With CCB is? With CCB 11.5. Very good. Okay, with CCB is 11.5. So RBI says with CCB you have to keep it 11.5. So this is very good. Higher than whatever is required. 15.03. Okay. Got it? 15.03 is the higher CCB. So it's at a higher level. So the bank is satisfactory, working satisfactory over here. Okay? Kindly note. The bank is working satisfactory over here. Got it? Clear, everyone? Bank is working satisfactory. See, I won't go into the details now. There are many terms which can be asked on this. Okay? So you need to understand this much only. In exam you are asked this much. No confusion. Is there any confusion in the minds? Is there any confusion now? Tomorrow if this numerical comes or similar numerical comes, will you be able to solve it on your own? Tomorrow if similar numerical comes, will you be able to solve it on your own? Yes. Will you be able to solve it? Okay. Chalo, let's move on then. 5 marks, 5 marks. This is a 5 marks case study. Correct. It's a 5 marks case study. You will get 5 marks case study on this. Okay. Kindly note, you will get a 5 marks case study on this. Now, today I promised you 4 things. One is LC, second one was Rarok, third one was what? Forex. Yeah, and fourth one was that horizontal vertical disallowance. So first part LC. Okay, LC today. LC, pay attention everyone. Letter of credits. Okay, LC. See, always remember, firstly, why LC is taken by anyone? Any client, why does he take LC? Why does any client take LC? Okay? Buffering? Is it buffering? No, all the terms. One sec. FRA 3 by 9. Okay. FRA 3 by 9 is very easy. Yeah. FRA 3 by 9 is very easy. See, before going here, I'll explain what is FRA 3 by 9. This question comes in exam for 1 mark. See, I'll write it, I'll show you here only. FRA 3 by 9 means FRA, it's like this. FRA means forward rate agreement. Forward rate agreement, and it's given as 3 by not 9 actually, it's given as 3 by 6. It's like this, 3 by 6. Okay? It can be anything. 9 also is allowed. 3 by 9 also, 3 by 6 also. Everything is allowed. What do you mean by this? It means that, pay attention everyone, FRA 3 by 6 or 3 by 9, anything. Suppose if today is what? December, right? December 6th. Okay? So 6th December. So when I say 3 by 6, it means what? From December, it starts 3 months from here. See this 3 is over here. This 3 is over here. So your FRA will start from 3rd month. So December means January, February, March. Okay? So it will start from 6th of March. 6th March it will start. Okay? 6th March it will start. And this is end. End means it will end again 6 months. But 6 months from where? 6 months from here. Everything is from the start. Kindly note. This is from here start only. And this is from also start. Okay? 3 months also from today. And 6 months also from today. So 6 means December plus 6. So again March plus 3, April, May, June. So it will end on not 6th June, it will be 5th June, 1 day less. 5th June. So this is known as FRA 3 by 6. Okay, this is known as FRA 3 by 6. Okay. Got it, Srikant? Everyone got it? This question comes for 1 mark. Now, can you give me the answer for, suppose if I ask you, FRA 3 by 9. I'll ask you FRA 3 by 9 now. Can you give me the answer? It will start when and it will end when? Start when and end when? 3 by 9 now I want. 3 by 9. When will it start and when will it end? When will it start and when will it end? FRA 3 by 9. Now I want it for 9. Yes, when will it start and when will it end? FRA 3/9. It will start in March only, that's right. And end with, no, it will not start in December. It will start in March. Niveta, okay? It will start in March only. 3, starting is 3, so March. And ending is when? 9. So 9 from today. So it is what? September? June, July, August, September, yeah. So 5th September it will end. Got it? March and September. Got it, everyone? No, it will not start from 6th December. It will not start from 6th December. It will start from 6th of March. 3 means what? 3 starting point. 3 months from today. So 3 months from today is 3 months from December, January, February, March. That is the meaning. Got it, everyone? Clear? Chalo, let's move on then. So now, LC. See, LC consists of 3 flows. Kindly understand, everyone. Be very clear about it. LC consists of 3 flows. 3. One is LC flow. Have I written it? LC flow. This is called as LC flow. LC flow. Okay. Second consists of documents flow. Documents. How do the documents move? And third consists of money flow. Money. How does the money move? It's that simple. So we will be doing it. All the 3 I'll explain you. LC flow, documents flow, and money flow. Okay. So now, what is LC flow? LC flow means what? Firstly, this is a seller or exporter. This is a buyer or importer. They decide that they will do the business with each other. They will do the business with each other, right? So what happens? How do they decide? How does the buyer know or seller know that they are going to do the business? Documents. See, it's like this. Buyer will first give the purchase order. Put purchase order. That, see, I want this. Okay. Based on this purchase order, this seller will prepare a pro forma invoice, or we call it quotation also. There is another name to this. That's called as quotation. So pro forma invoice or quotation. So he'll give you that, seller will give to the buyer that, see, this is the tentative rate. Roughly, this can be the rate. Okay. So these 2 documents are there now. Now what is happening? This buyer is having 2 documents now. One is this purchase order and second is this quotation. So he will take these 2 documents and go to his bank. He will go to his bank. This bank is now called as issuing bank. Okay, this bank is called as issuing bank. Correct? Yeah. So this bank is called as issuing bank. Kindly note the names as well as the names of the banks. Where do these banks come? Issuing bank comes always in all the 3 flows. Issuing bank will be there in all the 3 flows. LC flow also, money flow also, document flow also. Now this issuing bank will do what? It will take the documents, do the KYC. KYC AML is very important. It will do KYC AML and then it will issue the LC. Now this LC is going where? This LC should go to this guy. Ultimately, where is the LC to go? The LC is to go to this guy, this seller, right? This LC has to go to this seller. But the problem is, issuing bank doesn't know this seller. Whether this seller is fraud, it can happen. This seller is also fraud. It can happen. So in that case, how will the issuing bank trust this guy? It doesn't know. So in that case, what happens? Issuing bank says, okay, what to do? Let's say this issuing bank is in USA. See this, USA. This bank is, let's say, big bank, Citibank. Okay, Citibank, because I was working there, that's why I know this name. Okay, so let's say it is in Citigroup. Okay, so what will this Citigroup do? It has to send a LC to this guy. So it won't send it directly. What will it do? It will appoint an agent over here. Agent in the country of that seller. In the country of that seller. So let's say this is SBI. Example I am taking. It can be anything. SBI, PNB, BOB, HDFC Bank, ICICI Bank, anything. So this bank will appoint an agent over here. What will this agent be called as? This agent's name is advising bank. Getting this? This agent's name is advising bank. So what will this advising bank do? Check whatever I have written it over there. Advising bank's jobs are two jobs. What? One, check the authentication. Authenticity of the LC. Authenticity means what? What do you mean by authenticity? Authenticity means whether this LC which is received from this bank to this bank is true or fake. Because there are many things in the world. I myself faced 2 to 3 cases of fake LCs. Fake. Totally fake. So, many times these fake LCs are issued from some other bank. And then these LCs are sent okay, to the banks. So this bank will check the authenticity, number one. Number two, what will it do? Number two, it will forward all the pages of the LC to the beneficiary. It will see to it that the LC which is received, see, how will it receive the LC first? How will this bank receive the LC from this bank? It will receive it through SWIFT. SWIFT, okay? And now there are new terms coming up. SWIFT is getting changed a bit. Now they are coming up with ISO 20025, 20025. They are coming up with new ISO. So SWIFT is getting replaced, not replaced actually, it is getting changed, enhanced. ISO 20025. So it will be received from SWIFT, let's say SWIFT right now. It will be received by SWIFT. So it will take a printout. This advising bank will take a printout of this. And this printout will be sent via courier to this guy. Right? This printout will be sent via courier to this guy. Means seller. And this seller will pay the advising bank charges. See, advising bank charges will be paid over here. Pay attention. Advising bank charges. Means courier charges simply. Okay. So here the first flow ends. Here your first flow is over. LC has reached to this person. Right. Now the first level of the documentation, first level of the flow is over. Now what will this person do? He has now received the LC. So once he receives the LC, this person is sure now that I will get the money. See, LC means what? Guarantee of payment. By whom? This bank, issuing bank. So now this person will be sure that I'll get the money. So he'll move on to the next level now. What is the next level? Okay. So he'll move on to next level. Next level means like we have nowadays in Netflix, season 1, season 2. Okay. Or even in the games we have nowadays levels. Same thing happens over here also. So this exporter now, what will he do? He will prepare the goods. Now, see, once I am sure of payment, then only I will prepare the goods. So I will prepare these goods, put it to the, send it through a customs house. And from that customs house, I will send it to USA. So the goods will reach to the port, USA port. It will not reach, buyer will not have the goods. The goods are on the port right now. When will the buyer be able to take the goods? When he has documents. When the buyer has documents, only then he will be able to take the goods. But where are the documents? Documents are going from, goods are going from here through ship. Documents are going through bank. Documents are going through bank. So now what will this seller do? He will prepare 6 documents. 6. Mind it, these questions will be there in the exam. Will be there in the exam. Kindly note. Okay? 22, I think so, yeah. 20,022, yeah. 22 only, not 25. It's 22 then. Yeah, correct. So it's getting replaced. So this seller will do what? Now he will prepare the documents and send it to his bank. Now these documents are 6 documents: 2I, 2B, PC. Invoice, insurance, bill of lading, bill of exchange, and packing list and certificate of origin. Invoice, insurance, bill of lading, bill of exchange. I have written it over here. Okay? Bill of lading, bill of exchange, and certificate of origin and packing list. So he'll prepare these 6 documents. Out of these 6, 3 are negotiable. 3 are negotiable. Insurance, bill of lading, bill of exchange. 3 are negotiable. Okay? So he'll prepare these 6 documents and give it to his bank. Okay? Now his bank will do what? His bank has now 2-3 jobs. First, if his bank is a confirming bank, if this bank is a confirming bank, then what will happen? This bank will confirm the LC, means it will guarantee the payment on the due date. Now kindly understand, in confirmed LC, there are 2 guarantees of payment. 2. Why? One is from this bank, his bank, and second is from the issuing bank. So there are 2 guarantees of payment in confirmed LC. So now if in the exam, if the question comes, in confirmed LC, how many guarantees of payment are there? You should be able to answer that. In confirmed LC, how many guarantees of payment are there? You should be able to answer that. Yes? Got it, everyone? How many guarantees of payment are there in confirmed LC? Yes, in confirmed LC, how many guarantees of payment are there? 1 or 2? Yes, it is 1 or 2. 2 guarantees of payment are there, right? So 2 guarantees of payment. Got it? So next, now let's move ahead. So now this bank will, excuse me, will give the confirmed guarantee of payment and it will send the documents to the issuing bank. Okay, it will send the documents. It will check the documents. It will first check the documents and then send the documents to the issuing bank. So this is confirmed LC. Second rule is, if this bank is a negotiating bank, then this bank will immediately pay to this guy. This is called as post-shipment finance. This bank will pay immediately to this person. This is called as post-shipment finance. Okay. So now in post-shipment finance, this exporter's bank immediately pays. Okay. Immediately pays to this exporter, post-shipment finance. Okay. It is always given 100% of the value of the goods. Complete 100% is given. Pre-shipment finance is given 75 to 80%. Post-shipment finance is given 100%. Kindly note this. Okay, I'll clarify 2-3 terms over here now. Okay. Pre-shipment finance is given on FOB basis. Everyone write it down. Pre-shipment finance is given on FOB basis. Okay, pre-shipment finance is given on FOB basis. Post-shipment finance is given on any basis, FOB, CIF, anything. Okay. Number 1, pre-shipment finance is given 75% or 80%, not full value. Post-shipment finance is given complete 100%. Okay. It is given complete 100%. Pay attention to the words I am saying. Okay. Then in pre-shipment finance, the end use is tracked. End use is to be tracked. In post-shipment finance, we don't track the end use except for AML. Means if it's going for some terrorist activities, then it's tracked. Otherwise, no. We don't track the post-shipment finance end use. But in pre we track. Okay. So this was about pre and post. Next, now what happens? This finance is given and the documents are again sent. See, in any case, the documents are sent to the issuing bank. In any case. Got it? So these are the two roles played by his bank. Now what has happened? Look at it. The documents are prepared. They went to this bank. From here they went to issuing bank now. They went to this issuing bank. So now this second flow is over. Second flow is over now. Okay. So second flow is over. Got it now? Second flow is over. Got it? Clear everyone? So now what has happened? Documents are with the issuing bank now. Now issuing bank will do what? Issuing bank will check the documents. Check whether the documents are correct or not. Issuing bank will check the documents whether they are correct or not. Okay. So now let's look at it. If the documents are incorrect, let's say, if the documents are, say this, now this is the third flow. That is called as money flow, money, paisa, money flow. Now what will happen over here? If the documents are incorrect, wrong, discrepancy is there, something wrong is there in those documents, what will happen? This issuing bank will not pay. It will say, it will send a message to this sending bank as well as to the beneficiary that, see, your documents are incorrect, I am not going to pay. Okay, so the question ends over here. Nobody can challenge it. If the documents are really incorrect, you can't force the issuing bank to make the payment. Clear? This part is okay. Documents are not correct, issuing bank is not paying. Now second case, issuing bank, documents are correct as per the terms and conditions. So now what will happen? Issuing bank has to pay. Now how will the issuing bank pay then? How will the issuing bank pay in this case? For paying, what will the issuing bank do now? It has two ways. One is, number one way is it will maintain a nostro vostro account. Nostro vostro account with this bank, sending bank, confirming or negotiating bank. Okay? It will maintain a nostro vostro account with the confirming bank. Now what is nostro vostro? See, kindly understand. Nostro means my account with you and vostro means your account with me. Okay? Nostro vostro means my account with you and vostro means your account with me. What does it mean? It means that, see, simple. When this bank has an account with, Citibank has an account with SBI, then Citibank will say, I am having nostro account with SBI. And SBI will say, I am having a vostro account of Citibank. Account is same. Only what do we call? Okay? What do we call? It's from whose angle you are looking at it. Right? Like this. Jamai Raja. We have this in our word, in our Hindi. Jamai or son-in-law. So son-in-law or Jamai, right? What is it? He is basically someone's son only. But from whose angle you are looking at it? Same thing for the girl also. Bahu and ladki. So person is same. From whose angle you are looking at it. So this is this, nostro vostro. Account is same. Account doesn't change. Kindly note this. Account will never change. It's only from whose angle you are. So now clear this nostro vostro. If they are not having nostro vostro, means if they are not having this nostro account with this bank, then they will maintain a third account system. That's called as Loro. Loro means they will have an account with the X bank, your reimbursing bank. A separate bank they will have an account. Both the banks, this also, this also. Both the banks will have an account with the third bank, and this third bank is called as reimbursing bank. Reimbursing bank. Okay, getting this? Got it? No, FOB in post shipment. FOB is in pre-shipment. Bhavani, FOB is in pre-shipment. Again, post-shipment it's anything. Generally, CIF is there in post-shipment, but FOB is strictly in pre-shipment. Okay? So, got it everyone? So, this is called as LORO arrangement. You will definitely get a question tomorrow on Nostro, Vostro and LORO. Okay? Now, you have seen yesterday Russian President Vladimir Putin, he was over here, right? In our country, Bharat. Why was he here? He was here for this only, Nostro Vostro. Main purpose of yesterday's visit was Nostro Vostro. Now our country is not dealing in Loro. Our country is saying that we won't deal in Loro. Because Loro means dollars. And our country says no more dollars. We are now in Nostro Vostro. Direct your currency, my currency. Simple. Exchange. That's it. So that is the biggest advantage of Nostro Vostro. Yesterday Putin's visit was for this only. Nostro and Vostro. He doesn't want Loro. He wants Nostro Vostro. Okay? Got it everyone? So, now the question, this overall case is over. Why? Because payment has started from this bank, issuing bank, and it has reached this bank, exporters bank. Okay, it has reached this exporters bank. Now this exporters bank will give the money to this guy because he is his regular customer. So this bank will give the payment. If it has given the finance, it will remove the finance and give the money. So here your transaction ends. Everyone, here your transaction ends. Got it everyone? Yeah. Correct Nivetha. Here your transaction ends. Clear everyone? Okay? Here the transaction is ending. Everyone is okay with this now? Up till now everyone is okay? Are you with me? Everyone? Are you all with me? Okay? Okay with it? Shall I move ahead? So first part was LC. So that is done now. LC is done. Now let's move on to second part. Let me first, one second. So let's move on to the second part now. I promised 2-3 things today, right? So one was LC. Something more is remaining in LC. Okay, let me cover that LC part, something more also. One question which you will get is types of LCs. You will get a question on types of LCs. That also I will cover. Chalo, let's cover it. Types of LCs. Huh? There are mainly 3 to 4 types of LCs. Okay. Remember them now. Don't go on writing and something. Don't go on mugging up. Just remember it now. Okay. Try to understand. First type of LC is, because here I have dealt in this topic. I have worked practically in this banking in this field. That's why I know it. First type of LC is one. I'll give you red clause LC. Red. This question generally comes in exam. Red clause. Okay. Types of LCs. Let's cover that also. Red clause LC means what? I'll give you in one line now. I won't go on explaining it. Because why? It is waste of, this is done earlier. Now you have to just remember. Red clause LC is the LC which gives you the right of pre-shipment finance. Pay attention. It gives you the right of pre-shipment finance. Pre-shipment. Pre-shipment finance. So it gives you the right of pre-shipment finance. Red clause LC. Okay? That is red clause. Okay? Then second is green clause LC. Green clause LC. So that gives you the that gives you the right of pre-shipment plus pre-shipment plus warehouse. So that gives you the right of warehouse and pre-shipment both. That is called as the green clause LC. Okay, green clause LC. Got it? Got it? So that is called as green clause LC. This will be there. One of them will be there tomorrow in the exam. Red clause and green clause. And one more question will be there. That will be back to back and transfer LCs. Okay. Third one is transfer LC. Transfer means what? Whenever your party or your beneficiary exporter is an agent, he or she is not the manufacturer, is an agent, then you have transfer LC. This LC is transferred from this person. First it is given from this buyer to seller. Seller will further give it to another manufacturer because this person is just an agent. He will eat the commission and give it to the other person. That's called as transfer LC. In transfer LC, this LC is transferred to the next person. Transferred, same LC. Then you get one more question, that is called as back-to-back LC. Fourth, B2B. B2B LC, back-to-back LC. Okay, back-to-back LC will be one more question. Either this or this will be asked, either of these two. What is back-to-back? Back-to-back is same as a transfer. Only the difference is in transfer LC, same LC is transferred to the second person, second beneficiary, okay, or manufacturer. In back-to-back LC, a separate LC is prepared. Means this first LC is taken as a collateral. Based on this collateral, another LC is prepared and that is given to the manufacturer. This is the only difference in back-to-back and transfer. In transfer LC, same LC is transferred to the manufacturer. In back-to-back, this first LC is taken as collateral and then second LC is prepared. Okay? And one more question will come, that is irrevocable LC. What is irrevocable? This is the most simplest one, irrevocable. Okay, irrevocable LC means what? Irrevocable means it cannot be cancelled by the issuing bank without the consent of the other parties, mainly beneficiary. This LC cannot be cancelled by the issuing bank without the consent of beneficiary. This Benny over here or seller, you can say. Okay, so this is known as irrevocable LC. Clear these terms? Okay, clear? Everyone? Okay? All LCs are irrevocable, correct? Nowadays, all LCs are irrevocable. There is no LC which is revocable under UCP 600. There is no LC which is revocable under UCP 600. Clear this term? It should be very clear in your mind. Okay? Chalo. Now the LC is over. Now let's move on to next part. This numerical. This numerical was there in June 2025. Exactly same. Same numerical was there in June 2025. Okay? So now let's solve this. See, what is the question? Currency is given. Three currencies are given. USD, Saudi Riyal and INR. USD, Saudi Riyal and INR. Same three currencies are given. Their interest rates are given. 3 months, 6 months, 12 months. Simple. This is the data given to you. Okay? Based on this data, they will ask you the questions. Here if you see, spot rate is not given, nor the forward rate is given, nothing is given, only interest rates are given. And now what is asked to you? Question number 1. Pay attention. Now I'll ask you certain other questions. What will be the 6-month USD forward rate if spot rate is 73.75? What will be USD 6-month forward rate, okay, if spot rate is 73.75? Now how will you do this? This is done on the basis of one formula. What is that formula? That formula is like this. 1 plus home currency interest rate, see this, pay attention everyone. 1 plus H upon 1 plus F. This is for interest rate. What are you doing actually in this formula? You are on one side you are matching interest rate and on other side you are matching forward rate. Keep it very simple. One side interest rate, second side forward rate. Okay, this is what you are matching. Got it? So now, what will you do? How will you do this? One side is interest rate. So what is the interest rate? Interest rate is above is home currency, 1 plus H. Below denominator is foreign currency interest rate, 1 plus F. So 1 plus H upon 1 plus F. Simple. Now where will you get this H and F? Over here. Over here. Home currency and foreign currency. Home currency is what? Our home currency is rupee. So rupee. What is the duration? 6 months. So check for 6 months. See, this question is for 6 months. So check for 6 months. What is the home currency interest rate? Home currency interest rate over here is 3% for 6 months. So 1 plus 3. See, I have written 3 over here. 1 plus 3. 3 means 3%. So divided by 100. Okay. So 1 plus 0.03 upon. What is this for foreign currency? 1%. For foreign currency means USD. Now which foreign currency? You want it for USD. There are 2 foreign currencies given. One is USD, second is Saudi. But do we want it for real now? No, we don't want for real. So we'll focus on only USD now. Getting this? So USD is what? 1%. So again, percent means divided by 100. So 1 plus 0.03 upon 1 plus 0.01. So interest part is done. Interest part is done. Now forward. Forward is F upon S. Forward is F. So forward rate upon spot. So what is given over here? Spot is given 73.75. And forward you have to find out. So F upon 73.75. Now solve this. 1.03 upon 1.01. F upon 73.75. So do this cross multiplication. First do the answer for this. 1.03 upon 1.01. Whatever answer you get, multiply it with 73.75. Now you give me the answer. Everyone give me the forward rate now. Everyone give me the forward rate. What are you getting? Are you getting it 75.21? All of you. Are you getting it 75.21? Yeah. Are you getting it 75.21? Correct? So if you get this numerical tomorrow, again you should be able to solve this. So next, this is 6 month. Okay. Now second question, 75.21. Now this question. Now you solve it. What will be, is it the same? Yeah. See this. Now you solve this. What will be 12-month USD forward rate if spot rate is 74? You solve it, everyone. Give me the answer now. Now For this, what are you getting the answer? Let me see. For this, what are you getting the answer? What are you getting? 76 point. 76 point. Are you getting this? Let me see the answer. 76.89. The answer is 76.89. Are you getting it? 76.89. Okay? 76.89. Got it? Next. Now third one. What will be the 3-month Saudi Riyal forward rate if spot rate for Saudi Riyal is 19.32? So Saudi Riyal forward rate you want, spot rate is given as 19.32. Now 3-month. Pay attention to 3 months. So two things you will focus, 6.5 and 5.75. Now get the answer for this. Again the same. See, I have done the calculations over there. Correct. FOB is to be used for packing credit. Okay. FOB is to be used for packing credit. Kindly note. FOB is to be used for packing credit. Everyone like the video, subscribe to the channel, click on the bell icon. Tell others also to join. Everyone tell others also to join. Like the video, subscribe to the channel, click on the bell icon. Okay. Packing credit. We have already explained, na? You are there in the paid class, na, Karthik? It is already explained in the paid class regarding FOB. Okay. I'll try to explain if time permits. Okay. If time permits, I'll definitely take this packing credit case study. Okay. Chalo. Yes. What is the answer for this? $19.28. Acha, 19.28. So nearest answer you take it. Nearest answer. Okay, I'll try to explain it. Okay. Packing credit case study I'll try to take. But see here, everything can't be covered in 3 hours, dear. Okay, let's see. Okay. So, 19 point, I think so, I'm getting it 18. Right? What are you getting? So, roughly the answer should be 19.38. Okay. 19.28, sorry, not 38, 28. Okay. Yeah. Got it? Chalo, next one. So 28, done. This one. Now next one. What is it? Saudi Riyal forward rate. Now this you can solve it. I'll leave it now. Okay. This is very easy. Same numerical is getting again and again. So in exam also if it comes, you will be able to solve it. Got it? I'll leave it now. Okay. Now one question yesterday had come to me for modified duration. Macaulay and modified duration. How many of you know this? If you know it, we will skip it. Okay? Macaulay duration, modified duration. Because one question is there in the exam for Macaulay duration. Okay? What is Macaulay duration? Kindly note. Macaulay duration equals to summation of YAD upon AD. Kindly note this. YAD upon AD. Okay? What is YAD? See, always remember one thing. Volatility, standard deviation and modified duration. Okay? These means volatility and standard deviation. These two are same. Okay? These two are same. Got it everyone? Volatility and standard deviation, they are same. This is not right. Over here, these two are same. So now, the modified duration or volatility of an interest-bearing security is its Macaulay duration divided by 1 plus R. Always remember, modified duration equals to MAC upon 1 plus R. This question will be there. Modified duration is Macaulay upon 1 plus R. But what is Macaulay? In Macaulay, what do they give you? They'll give you the period of the bond, total life of the bond. How many years are remaining? They'll give you the coupon amount. They will give you the interest rate. Okay? So what you have to do is YAD upon AD. Remember this simple formula. YAD upon AD, everyone. Okay, you might be knowing this. How many of you know this? If you know it, we will skip it. Okay? If you know it, we will skip it. But if you don't know it, we will do it. Shall we do this? YTM, Macaulay duration. Okay? Do you want me to do Macaulay duration? Everyone. Macaulay. See this, Macaulay duration is what? Very simple. Okay? 3 things are given to you in bonds. One is number of years remaining. Okay. It is years remaining. It is number of years remaining. Years. Okay? Years equals to 3 years. Then they will give you coupon. Coupon equals to, let's say, 8%. We will call it anything. 8%. Then they will give you interest rate, yield. Yield they call it, or YTM they call it, YTM. So that is 6%. We are assuming it, huh? This. Then what? Face value. Face value will be given. Face value. Let's say 100 rupees. Okay. So now you have to calculate Macaulay duration. Okay. Macaulay duration. Got it? Macaulay. Macaulay is very simple. What you have to do? Y, A and D. Okay. Y, A, D. Y means what? How many years are remaining? 3 years. So 1, 2, 3. See, I won't solve it now. I'll only show you. Excuse me. Second is A, amount, whatever you are getting. So what will you get? You will always get the coupon. Kindly note, coupon is to be converted to rupees. Pay attention. Coupon is always to be converted to rupees. Okay? So 8% of 100. So it is 8 rupees. First year I will be getting 8 rupees interest. Second year I will be getting 8 rupees interest. And third year I will be getting 100 rupees my redemption value, my face value, plus 8 rupees. Both of them I will be getting interest also and principal also. So 108. Similarly, discounting factor. Discounting factor is what? 1 upon 1 plus r raised to n. 1 upon 1 plus r raised to n. So r is what? Rate of interest, YTM. And n is what here? Okay, so do it. 1 upon 1 plus r raised to n. So it is 1 upon 1.06, 1.06 raised to 1. Then 1.06 raised to 2, 1.06 raised to 3. Everything is 1 upon. So you get the answers. Okay, are you getting it? Give me fast the answers. Give me the calculations fast now. As we are doing it, let's do it now. Give me fast the answers. 1.06 raised to 1. What is the answer for this? 1.06 raised to 1. What is the answer for this? Fast. Yeah, what is the answer for this? 1.06 raised to 1. 0.94? Okay, Srikant. 0.94. See, I am taking it 0.94. Second one. This one, 1 upon 1.06 raised to 2. Do it fast. 0.8 something it will be. 83, 84 I will take it. Chalo. 0.84. What is the third one? 1.06 raised to 3. Okay, 0.88 you are getting. 0.88. Check this everyone. 0.88, 0.89. Somebody has given me 0.83. That's why I have taken 0.84. Everyone do the calculations properly. Don't jumble it. Okay. So now see, I'll have to do this because this will take time. That's why I was telling you to do it. Square 1.12 this upon, what is it I am getting? 0.83. No, I am getting some separate answer here. 1.06 square. So square is what? Square. 1.1236. So 1.1236. 0.889. Oh, the answer is different here. 0.889. For second one it is 0.889. So we'll take it 0.89. And here third one is 0.84. I'll take it. Okay. This is 0.84. Got it? 0.84. Got it? Now do it YAD. YAD. And then AD over here. AD. Do the multiplications. Do all the three multiplications. 8 into 1 into 0.94. Similarly, 8 into 2 into 0.89. Similarly, 108 into 3 into 0.84. Do all the calculations for this. For 8, 9. 9 for 8, 9, 8, 4. Third one is what? 8, 4, na? Yeah. Take it. So now, do the calculations for all the three. Do YAD, everyone. Do YAD, everyone. YAD, everyone, do it for all the three. Multiply it. So 8 into 0.94, 7.52. This is 7.52. This also will be same. AD, A into D. So 7.52. This will be same. Then here 16. 16 into 0.89. 14.24. 14.24. Okay, and this is what 8 into 0.89. 8 into 0.89. 7.12. 7.12. Okay, AD and YAD both you have to do it. Okay, then third one, 3 into 108. 108 into 0.84. So 272.16. 272.16. And this one is what? 108 into 0.84. So 108 into 0.84. 90.72. Now do it for all. Do the total. Do the total for all. Everyone do the total. 7.52 plus 14.24 plus 272.16. So 293.92. Are you getting this? You also try it, everyone. Then 7.52 plus 7.12 plus 90.72. So 105.36. 105.36. Are you getting it, everyone? All of you are getting it? 293 point something, 105 point something. Okay? Now find out this Macaulay. Macaulay equals to summation YAD upon summation AD. Summation YAD upon AD. So do it now. 293.92 upon 105.36. So 2.78 years. This is your Macaulay duration. Macaulay is 2.78 years and modified is what? Modified duration equals to Macaulay upon 1 plus R. See this, Macaulay upon 1 plus R. Do it, everyone. So 2.78 upon, what is R? R, 6. Right? Upon 1.06. So 2.63%. What are you getting? 2.63%. So that is modified duration. Are you getting this, everyone? 2.79 for Macaulay and modified is 2.63%. Macaulay is in years, modified is in years and modified is in okay. Got it? Yeah. So modified is always negative. Modified is negative. Kindly note, Macaulay is never negative. Modified is always negative. Means what? If the rate of interest goes up, price will go down. If the rate of interest goes down, price will go up. This is for modified. And Macaulay is interest rate becomes zero. The interest rate risk is zeroized in Macaulay duration. Got it, everyone? Interest rate risk is zeroized in Macaulay duration. Now we will do one important topic which I told you. Horizontal and vertical disallowance. Horizontal and vertical disallowance. Now we will do that. That is very important. Horizontal and vertical disallowance. Now we will do horizontal and vertical disallowance. Correct. Inverse relation it is. Inverse relation. Okay. So now we will do some another next topic, that is horizontal and vertical disallowance. Again, this question is surely there in the exam. Be very sure about it. In exam, this will be definitely there. Okay? What do you mean by this horizontal and vertical disallowance? It is a disallowance allowed. Disallowance means what? See, very simple terms I'll tell you. When you have two separate bonds, pay attention. When you have two separate bonds, one is plus, we call it long, pay attention. One is plus, that is long, and other is minus, that is short. Short is minus, long is plus. So we combine them, we adjust them. We adjust their risks. So this adjustment is called as allowance. And some part of that is RBI says don't take full 100% adjustment. Give some change, some difference, keep some difference. So that difference is known as disallowance. When you adjust two bonds, one is long, second is short. The adjustment is called as allowance. RBI says you should not allow full 100% of the bonds. Always remember, but one is long, other is short. Long cannot be adjusted with long. Short cannot be adjusted with short. Got it? So long can be adjusted with short, short can be adjusted with long. Clear? You cannot adjust long with long, short with short. Positive with negative, negative with positive. Positive with positive cannot be adjusted. Negative with negative cannot be adjusted. So when you adjust this positive negative or plus minus or long short, then that part which is not adjusted is called as disallowance. You call it simply the commission taken by RBI, let's say. See, it's not actually. I am just telling you hafta, commission taken by RBI. A bit. It's not actual term, but for your exam purpose, I am telling you, how will you remember this? Commission taken by the market, let's say, market. So what is that? See, whenever you adjust within itself, there are three zones given by RBI. Zone 1, Zone 2 and Zone 3. Three zones are given. First zone is up to 1 year. First zone is up to 1 year. Second zone is from 1 year to 3.6 years. 1 year to 3.6 years. Okay? This is known as zones. Third zone is from 3.6 years to infinity. Infinity. It will go on and on and on and on. Okay? You don't have to remember all these figures. You don't have to remember. You have to remember only the zones. Zone 1, Zone 2, Zone 3. Up to 1 year, 1 to 3.6 years, and then 3.6 and above. Now let's look at it. Suppose if I am having one bond, pay attention. whenever I am having one bond, say this bond is of 1 month, that is long, 1 month long, okay? Now this bond, 1 month long, this is adjusted with, let's say, 6 months short. See, what did I say? Long is adjusted with short. So 1 month long with 6 months short. So they are falling in which zone? Both of them are in single zone, zone 1 only, up to 1 year. So 1 month and 6 months are in the same zone. So whenever you adjust two bonds in the same zone, then you take disallowance, this disallowance, disallowance, this is for disallowance, all these things, remember, disallowance. Then you take disallowance as, pay attention, 5%. In the same zone, if you are adjusting the bonds, you take disallowance as 5%. Okay? So now, if I ask you, see, if I have to adjust two bonds, one is long, other is short, okay, for, let's say, 1 year and 2 year, for 1 year and 2 year, not 1 year, 1.5 years, chalo, 1.5 years and 2 year. I have to adjust two bonds, one is long, other is short, 1 year and 2 year, 1.5 year and 2 year. So what will be the disallowance over here? What will be the, in which zone will they be? 1.5 years and 2 years. In which zone will they be? Everyone, in which zone will they be? Yes, which zone will they be? They will be in zone 2, 5% and second zone, correct? This is again 5% and they will be in second zone. Okay, got it now? Clear everyone? Now next, if I have to adjust two bonds, one is long, another is short, and the period is 4 years and 10 years. 4 years and 10 years. So in which zone will they be? 4 years and 10 years. In which zone will they be? 4 years and 10 years. In which zone will they be? Which zone will they be? 4 years and 10 years. Which zone they are? They will be in third zone. And what will be the disallowance? What will be the disallowance? Disallowance will be 5%. Okay, 5%. Got it? 5%. Got it? It will be 5%. Got it, everyone? Now next part. Pay attention. Positive means long, negative means short. It will be given to you in exam. We will take one numerical also. Okay, now everyone pay attention now. Suppose if I am adjusting bonds of 6 months and 2 years. If I am adjusting bond of 6 months and 2 years. So in which zone will it be now? 6 months will be in zone 1 and 2 years will be in zone 2. So now they are in different zones. So when you are in adjacent zone, zone 1 and zone 2, nearby zones, then RBI says you should take 40% disallowance. 40%. When you are in adjacent zones, you have to take disallowance as 40%. Okay? So, if I am adjusting a bond of zone 2, means let's say 2 years, and second one is 5 years. 2 years and 5 years. Then they are in which zone? Adjacent zone. Zone 2, zone 3. Zone 2, zone 3. So in that case, what will be the disallowance? Again 40%. When you are adjusting the bonds with adjacent zones. Pay attention, don't miss it. You will be taking disallowance of 40%. Got it? Now third part. If I am adjusting bonds of 6 months and 5 years, 6 months and 5 years, then they are in different zones and not even adjacent. Are they in adjacent? Zone 1 and zone 3. In between there is zone 2. So whenever you are adjusting from zone 1 to zone 3, you have to take disallowance of 100%. 100% in zone 1 and zone 3. In adjacent zones, you have to take 40%. Remember this by heart. In the same zone, you have to take 5%. Adjacent zones, 40%. Long distance zones, zone 1, zone 3, 100%. Got it, everyone? Clear? Now let's solve one numerical on this. Okay? Say this. This is same. 5% is over here, 40% is over here, here it is 100%. See, same thing I have written it over here. Okay? So within the same zones, 5%. Within the adjacent zones, 40%. Within distant zones, long distance zones, 100%. Got it? Clear? Now let's solve one or two numericals. See this now. Pay attention to this. Now look at it. Bond 1. Pay attention everyone. Okay? Pay attention everyone. Bond 1 is long 2 months. It will be given to you. Long 2 months. Bond 2 is short 3 months. Bond 1 is long 2 months. Bond 2 is short 3 months. So in which zone they are? 2 months and 3 months. So they are in zone 1. See this. Zone 1, zone 1. Can they be adjusted? Can they be adjusted? Yes. Why? Why can they be adjusted? Because long and short, plus, minus. So they can be adjusted. What will be the disallowance? The disallowance over here will be vertical. Why? Because it's in the same zone. Vertical is always in the same zone, 5%. See this, 5%. It will be 5%. Got it, everyone? First line, everyone clear? Long 2 months, short 3 months, same zone. Okay? And adjustment can be done? Yes. Vertical adjustment is this. And then 5% disallowance. Clear? Second bond. Long 6 months, short 2 years. Long is 6 months, short is 2 years. So this is in which zone? Zone 1 and zone 2. Separate zones now. So now can they be adjusted? Firstly, can they be adjusted? Long and short. Yes, they can be adjusted. Right? Next, what is this adjustment? It is horizontal adjustment. Why? Because different zones. So it is horizontal adjustment. How much it is? Zone 1, zone 2. Adjacent, 40%. So 40% over here. Third, everyone clear in first 2 lines? 1 and 2 line. Everyone is clear? Type yes in the comment section if you are clear. Okay? Got it? Everyone clear in this? Type yes in the comment section if it is clear. Okay, next now. Second one. Next. Now look at the third one. Third one is what? Short for 7 months and short for 5 years. Short for 7 months, short for 5 years. Firstly, can it be adjusted? No. Why? Because short and short, negative, negative, no adjustment. So forget everything, nothing is applicable then. Okay, short with short, not allowed. Third one, fourth one, long for 5 years, long for 2 years. Can this be adjusted? Long and long, not adjusted. Let it be in any zone, it can't be adjusted. Right? Long with long, done. So 5 years and 2 years, so it cannot be adjusted. So no, everything is NA over here now. Now long for 5 years and short for 3 months. See, long for 5 years, short for 3 months. 3 months is in which zone? First zone. 5 years is in which zone? Zone 3. Now they are far off. Far off means 100%. So can they be adjusted? Yes. It is horizontal. And what is the percentage? 100. Got it? 100% is the adjustment. Got it now? Clear everyone? Now take this numerical. This is the numerical. See, I am taking the full class only. Because I know many of you didn't understand this earlier. And tomorrow this question will be there. See now, pay attention to the numerical. I am taking full class only. Yaar, what is this? Audio not there. What is the problem? One second. Are you getting the audio, everyone? Kindly check. Are you getting the audio? Type yes in the comment section. Type yes in the comment section if you are. Are you getting the audio? I am getting the complaint that audio not there. Audio is there, na? Audio clear. Okay. Audio is clear. Okay. Kindly check it that someone is not getting it. Kindly check at your end. Okay. So clear, na? Chalo. Let's move on. So now let's look at this problem. Pay attention to the problem now. This numerical, you won't get the full numerical, you'll get one part of this, not full, till you'll get one part of this. Long bond is given, see, pay attention, okay, long bond is given, okay, period is 2 years and amount is 100. So pay attention, long period is 2 years, amount is 100, okay. So long means positive. So now, let me see if I have solved this. Yeah, I have solved this. See this. We'll write this all. Long, 2 years, 100. So let's write it. See this first one is long, 2 years, 100. Okay. 2 years means second zone, zone 2. Right? 2 years means zone 2. Second one. Long, 5 years, 450. Pay attention to the amounts and all the 3 elements. Long, 5 years, 450. Write it. So, long, 5 years, 450. Which is the zone? 5 years. 5 years means zone 3. 5 years is zone 3. Okay. Third one. Short, 6 months, 100 crores. Short, 600. Write it. So, short, 6 and 100. See, short means what? Minus. So, that's why I have written it minus over here. And here I have written plus. So, which zone is it? 6 month. So, first zone, zone 1. Fourth one. Short, 2 years, 50 crores. Short, 2 years, 50 crores. So, short, 2 years, 50 crores minus. So, now you have to solve this. How will you adjust these bonds? Now you look at it. What is to be adjusted first? Pay attention, everyone. What is to be adjusted first? Okay? For adjusting first, what do we do? Are you with me, everyone? Firstly, all of you are with me. All of you are with me, everyone. Are you with me, everyone? Are you with me or getting bored? Are you with me or getting bored? If you are getting bored, then we'll move on. So what is to be adjusted first? Always remember, try to adjust same zone first. Same zone. First, try to solve the problem in your house. Then try to solve the problem in your gully, means which your neighborhood, your lane, your society. First solve the problem in your house, then solve the problem in your society, then solve the problem of the city. Right? There's the problem in your house and you will solve the problem of city. First solve the problem of your house. So first solve within the same zone. Then solve adjacent zone, society. Then solve long distance, so city. Follow the same sequence in life. Okay? See this zone 2, they are in same and they can be adjusted also. Long and short. That is also to be checked. Long and short. Right? So 100 and minus 50. You will first solve 100 and minus 50. So first transaction will be like this. See, first transaction will be, see, I'll write the transaction now. Transaction. There are two parts now. One is transaction and second is remaining. I'll write it remaining over here. Remaining. Okay? First is transaction, second is remaining. So first one now. Transaction means what is the actual transaction happening. So long is 100, short is 50. So what is the transaction? What is the adjustment happening? Adjustment is always happening of the lower amount, 150. So always, suppose if I am giving you 100, if I am selling something at 100 rupees and you are ready to buy at 70 rupees. So if we agree, what will happen? You will pay 70 rupees. So lower amount is always taken. So transaction is always lower amount. So it is 50. 50 is the transaction amount. But when it is 50, my disallowance will be what? Zone 2, same zone. So 50 into 5%. This is my transaction amount, 100 minus 50. This is my transaction amount. What is the actual transaction happening? Transaction is happening for 50 rupees only. And remaining out of this 150 is gone. So remaining is 50 now. That also plus 50. See this, plus 100 plus 50 because 100 is bigger. So plus 50. So now this is done. First transaction is over. Now second one, what will you adjust now? Zone 2 is done. So zone 2 should be adjusted with what? So thus this plus 50 remains. Okay, this is long because plus 50, 100 was plus. So this is long. So now this will be adjusted with what? Second and third are remaining. Only 2 are remaining now. 1 and 4 is gone. Only 2 are remaining. So this will be adjusted with what? You tell me now. Will I adjust this 50 rupees with this long or this short? Who can tell me? Should I adjust it with transaction number 2 or 3? Offsetting, correct. Should I adjust it with 2 or 3? I'll adjust with 3. Why? Because this is long. Long can be adjusted with short. It's like the marriage. Marriage, boy and girl. Girl and boy. Boy. Not allowed. At least in finance, it's not allowed. Okay, finance, long with short, short with long. No adjustment of long with long. Okay. So, plus 50 is to be adjusted with short. So, that is what, now look at this. Which is this zone? This is zone 2. This remaining one is of zone 2. And this one is zone 1. So, they are in adjacent zones now. So, plus 50 and this is minus 100. Okay, plus 50 and minus 100. So, this transaction will be for what? Lower amount. 50. So, again 50 is the transaction amount. Second one, 50 is the transaction amount, but now the disallowance will be zone 2 and zone 1. So it will be 40%, right? 40%. Got it? Now what is happening? Now remaining. What is remaining over here? Remaining over here was plus 50 and minus 100. So what is remaining now? Minus 100 is remaining. So minus 50 is remaining. Okay? Plus 50 minus 100. So what is remaining? Minus 50. So this is short. And which zone? Who is bigger now? Plus 50 was for zone 2 and 100 was for zone 1. So who is remaining? Zone 1 is remaining. So this is zone 1. Minus 50 for zone 1. Now last one. This is long and this is short. Right? Minus 50. So now what will you do? You will adjust them. Plus 450 and minus 50. So now the transaction is happening for what amount? Lower amount. So 50 into what is the zone 1 and zone 3? Zone 1, zone 3, 100%. And what is remaining now? Remaining is minus 50 and plus 450. So it is plus will remain. 50 gone, 400 remaining. But that is plus 400. Plus 400. So that is long remaining. Okay? So this is in zone 3. Forget this zone now. Now this is of no importance. So this is remaining plus 400. Okay? This is your RWA, risk weighted asset. And from here also, this disallowance will give you a risk weighted asset. So what is the answer for this? 50 into 5%. So 2.5. 50 into 40%. So 20. 50 into 100%. 50. So 50 plus 20 plus 2.5. So 50 plus 20 is 70 and 72.5, right? 72.5. Everyone getting this? 72.5. Are you getting it? Everyone okay with this? 72.5. Everyone getting this? Clear everyone? This should be very clear in your minds. This should be very clear in your minds. In exam, see, again I'll tell you, pay attention everyone. In exam, you will not get these 4 transactions. Such tough numerical will never be given. If they give you this tough numerical, it will be for 5 marks. It will be for 5 marks. If they give you this numerical, generally what do they give you? Generally they will give you only 2 transactions, any 2. One long, one short. They will only tell you to adjust. That's it. For that you need to have this basics clear. Same zone 5%, adjacent zone 40%, last zone 100%. Only 2 transactions are asked. Generally, they don't ask you this full case study. But be prepared for the worst. If your luck is very hard, if your luck is very bad, they will ask you this case study. Okay? This will be the 5 marks case study then. But see here, if you know it, it's very easy. If you know it, it's what is there in it. Just do plus minus and solve it. Got it, everyone? So now what is my RWA? If I ask you my RWA now, so RWA will be 400 from this and 72.5 from this. So 472.5. This is my risk weighted asset. Net of all this is 472.5. Okay? The options will be same. They'll give you some wrong options, they'll give you some right options. You have to understand only one thing, Reshma, that long is to adjusted with short. Same zone adjustment is 5% disallowance. Alternate zone, adjacent zones is 40%. Distant zones is 100%. Long is to adjusted with short only. Long cannot be adjusted with long, short cannot be adjusted with short. You have to remember these 3-4 basics which I told you, and you can solve it. Got it? Clear everyone? Yeah, 472. Okay? 0.5. Clear? Move on. This numerical, if it comes, will be for 5 marks. If it comes, huh? This is what? Let's take a break for 2 minutes, for 5-10 minutes, and then we'll solve this. This is from Rarok. What did I promise? LC. Then what? LC was there. Horizontal vertical disallowance. Then forex. Forex also we have to. Even I'll try to take one forex also. And last one is this Rarok. Okay? So Rarok we are having 2-3 numericals. Both of them, all the 3 will be solving. And then if time permits, we will try to solve one pre-shipment. Pre-shipment finance. Okay? We'll take a break of 10 minutes. Break. 10 minutes. Okay? Everyone. We'll take a break of 10 minutes. Okay? Yeah, that is the final answer, Bhavani. Okay? So chalo, let's start again. Hi everyone, welcome back. Welcome back everyone. Okay, let's start. Give me 1 minute. I'll just check this. Hold on. Let me download this also. Okay, just give me 1 minute. Yeah. Chalo, everyone back? Everyone is back? Is everyone back? Okay, move on. Hi. Chalo. Let's move on with Rarok. Okay. Now Rarok. Yeah. Chalo. Let's move on with Rarok. Okay, Rarok. See this. There are 3 numericals in Rarok which come to you in exam. 3 numericals in Rarok. One is this one. This is the case study. If it comes, there are 4 scenarios given. There are 4 scenarios given. And this case study might be there or only one of part of this will be there. Either one part or all the 4 parts, depending on what is given. Okay? So now look at the problem. You are a bank, you are investing in 2-3 avenues, 4 avenues. One, case number 1 is you are investing in government securities. You are having 1000 crore rupees or 1000 rupees. Let's say, simple example. You are having 1000 rupees and you are investing full amount in government securities. Full amount. There are 4 avenues available. What are the 4 avenues? Number 1, government securities. Second one, AAA rated bonds. Second one is AAA rated bonds. First one, government securities. Second one, AAA rated bonds. Third one, AA rated bonds. Third one is AA rated bonds. And fourth one is single A rated bonds. So you are having 4 avenues for investment. So you can make the investment in all the 4. So now there are 4 cases. Case number 1. Okay, case number 1. You are investing in government securities. Full 1000 rupees you are investing in government securities. So now government securities means what? Central government securities. Central government securities means risk is 0%. Risk is 0%. So here you will get a 0% risk and returns they'll give you. Returns are 6%. They'll give you. Risk they will not give you. Returns they will give you. Returns they will mention it's 6%, but risk they will not mention. Risk you have to understand. Risk is 0%. So now if I invest 1000 rupees and 6% are my returns, so now look at it. 1000 invested. What is the return I am getting? See, total yield. Yield means returns. 6% on 1000. 6% on 1000. So I am getting 60 rupees. This much is my 60 rupees yield. 60 rupees is my yield. Now what is my percentage? Percentage means 60 rupees upon 1000 into 100. 60 rupees upon 1000 into 100. Right? So what is it? 6%. So that is same. Clear everyone? Up till now, returns up till returns yield percentage. Yield percentage is clear, 6%. Everyone okay with this? Now let's look at the risk part. Risk, see, this last part is of risk. Risk part is what? In government securities, it's zero risk. So zero. Government securities, zero risk. So no risk. What is the RWA in this? RWA, risk weighted asset, zero. There is no risk. So no risk weighted asset. See, RWA comes where you have a risk. So there is no risk over here. Okay. So risk weighted asset is zero over here. Got it? So now, what is the capital required? So capital required is also zero. Why? Because where is capital required? Capital required, what is the formula for capital? CRAR equals to capital upon RWA. Okay. So now if RWA is zero, my capital will be what? Zero only. Okay. No risk, no capital. So zero. Got it? So now, next part, case number 2. Pay attention everyone, now case number 2 is a bit trickier. 2, 3, 4 are trickier. Case number 2 is what is happening. I am investing 400 rupees in government securities. Then I am investing 600 rupees in AAA rated securities. 600. Now again, government securities 6% returns, 0% risk. So that is done. AAA rated securities 8% return, that will be given to you. In exam they will mention 8%, but risk will not be mentioned. Risk is 20%. This you will have to remember. AAA is 20%, AA is 30%, single A is 50%. Okay? Means thumb rule. BBB is 100%, BB and below 150%. You can write this down. Okay? And unrated is 100%. So now, here we are having AAA rated. So risk is 20%. Now let's do the calculation again. What are my returns now? Look at the returns. On 400 rupees, I will be getting 6%. So 400 into 6%. So what is it? 24 rupees. So 24 I will be getting. And on 600 rupees, I will be getting 8%. So 8 6 is 48. Clear? 48 from this and 24 from this total. So total is what? 72. So I am getting 72 rupees. Clear? Now this 72 rupees, what is my percentage return? Percentage return is what? 72 upon 1000. Total amount is 1000 net. So 72 upon 1000. So I am getting 7.2% yield. Got it? Yield is 7.2%. Now, what is my risk? Risk is 20% over here. 20% of what? 20% of 600. So 600 into 20%. So it is what? 120 rupees. See, 120 I have to keep. This is my risk weighted asset. 120 is my RWA risk. So what will be my capital? So capital, if I want, I'll have to take the CRAR. So what is the CRAR given? See, there are two CRARs given. One is as per Basel, second is as per this RBI. We in our country, Bharat, we follow RBI. We don't follow 8%. We follow the stricter norms, 11.5. So you want the capital now. So multiply this 11.5% with RWA, 120. So you'll get this as 13.8. Or if you multiply it with 8, you'll get it as 9.6. In the exam, they will mention, take CRAR as 8%, 11.5% or 9%. They'll clearly mention. Take CRAR as 8%. Okay? Yeah. As per, it is 8% or 9% or 11.5. They'll mention. So multiply it and you get this capital required. Okay, so this much capital is required over here. Got it? And what is my return? Percentage return is 7.2. What is my annual return? 72. Only this will be asked. Got it? Third case, I am investing 300 rupees in government securities, 300 again in AAA rated and 400 again in double rated. 3, 3, 4, 1000 total. Again do the same. Returns 6%, 8% and this is double A na 10%. 6, 8, 10. Okay, so do the calculation. 300 into 6%. 6 3 is 18. 300 into 8%. 8 3 is 24. So 18 plus 24. 400 into 10%. So 40. Yeah, 40. So 40 plus 24 plus 18. 40 plus 24 plus 18. Do the total. Total is 82. Check yourself. The total should be 82. Okay? 82. Total is 82. Again do it. 82 upon 1000. 8.2%. Yield clear. 8.2%. Now next. What is my risk now? Risk over here is in two instruments now. One instrument is this AAA rated and second is AA rated. In AAA rated the risk is 20%. In AA rated the risk is given as 50% over here. Actually AA rated risk is 30%. Actually AA rated risk is 30%. But if they give you an exam that it is 50%, then take 50%. It depends on what do they give. See, if they don't give you, double rated is 30%. 20, 30, 50 for single A. Triple B is 100. BB and below is 150 and unrated is 100. If they don't give you. So here it's given 50%. Take 50% then. So 400 into 50%, 200 rupees. 300 into 20%, 60 rupees? Yeah, 60. So 260 is my risk. See this, 260 is my risk. Risk is 260. Now if my RWA is 260, what will be my capital? Multiplied with 11.5. So 29.90. This much is my capital required. Again, case number 4, similar one, 3, 3, 2, 2. See now, here 200 we have invested. Total investment is 1000. So do it again. If you do the total 3 6 za, 3 8 za, 2 10 za and 2 12 za. Do the calculations and you should get it as 86. You must get this as 86. Okay? You must get this as 86. Got it? So 86. So 86 over here. Clear? 86 over here. Now what is the risk? RWA. RWA is this. Now there are 3 RWAs. 1, 2 and 3. What is given? See this. 20%, 50% and 100%. So take all of them. So 300 into 20%, 60. 200 into 50%. So 100, 60 and 100, 160. 200 into 100%, 200. Okay. So 300 and 360. So 360 will be your total RWA. 360 will be your total RWA. So if your RWA is 360, what will be your capital? Multiplied. Capital means 11.5%. So 360 into 11.5%. So you get it as 41.4. This much is your capital required. This case study, if it comes, only these points are asked. Only these points. And these points are easy ones. You must only don't get jumbled in RWA and yield. Don't get jumbled in RWA and yield. Okay? Because this is an important numerical which is asked as a case study in exam. Very simple one. Okay? Very simple one. Correct, Nivetha. Very simple one, but you have to be very alert. Okay? You have to be very alert. Got it? Yield is required in exam. Why are we calculating? Because yield is required. See, they'll ask you what is the expected yield in this. That's why we are calculating yield. See, you must know what is the expected returns in this. Whenever you are investing in anything, you must know where are we getting the returns. See, if you check the returns, here you are getting the returns of 6%. Here you are getting 7.2. Here 8.2 and 8.6. Got it? So this is the maximum returns. But there is also a problem over here. There is a maximum risk also involved over here. Because RW is 360. So what does the bank do? It checks returns versus risk. This is checked. And based on that, then we decide whether we have to invest or not to invest. Which scenario we must invest. Then we decide on that. That's why yield is calculated. Got it? So this numerical, if it is asked, it will be for 5 marks. Now next one. This one. This is a roughly 1 mark numerical. It is from same topic, Rarok. Okay, Rarok has 3 numericals. One is the first one which I took. This is second one and third one is there. Okay, I'll take all the 3. Out of these 3, 1 or 2 will be compulsorily there. Okay. Assume FX and bond trader having a notional amount and volatility as described below. So notional amount and volatility. It means what? Amount means what is the amount invested and what is the returns. The bond trader, see there are 2 traders. One is a forex trader, second is a bond trader. Kindly remember in life, bond trader is always less risky because bonds are very less risk. Forex is high risk. Always remember this. Forex, stocks, all these are high risk. Bonds are always low risk. Okay? So now, the bond trader deals in larger amounts, 200 million, but in a market with lower volatility, 4%. See, volatility in the market is 4% because there is not that much fluctuation in bonds. So 200 million is the investment, 4% is the volatility per annum against $100 for Forex. Now look at Forex. $100 million for Forex and 12% returns, 12% for FX trader. So volatility over here is 12%. See, volatility is very high, 12% over here. Their volatility is only 4%, means fluctuations up and down. So who is safe? Obviously 4% is safe, right? Now, the risk capital can be computed as VAR, say at 99% level confidence. Assuming the normal distribution, this translates into risk capital of. Now, what is the risk capital? Now, let's look at the risk capital for who? Firstly, let's look at for Forex trader. See, Forex trader is given. We will solve it for that other guy also, bond trader. So, first look at Forex trader. Forex trader is how much investing? 100 million. What is the volatility? 12%. Okay. And what is the confidence level? 99%. So for 99% confidence, the probability is 2.33. That will be given to you in exam. See, only 3 confidence levels are not given to you. One is 66.3 because there the probability is 1. Second is 95.5. There the probability is 2. 99.7. There the probability is 3. These are world level. So they will never give you in these 3. Remaining anything if they ask you. See, here they are asking for 99% confidence. 99. So 99% confidence means they should give you because you are not expected to remember this. You are expected to remember only 3. 66.3, 95.5, 99.7. These 3 only you are expected to remember. Okay? So now, solve this. See, what is my risk capital now? Risk capital over here is 100 million amount into volatility. Volatility is what? 12%, 0.12 into your probability, 2.33. So what is your risk capital over here? 28 million. Your risk capital in Forex, pay attention. The risk capital in Forex, this is for Forex, is 28 million. Okay, this much amount of your money is at risk. Now calculate the same for bonds. For bonds, let's do it for bond. Bond is what? What is the amount invested in bonds? 200 million. Okay, 200 million I'll write. I won't write these 6 zeros now. You can write 6 zeros and try it. 200 million into what is the volatility? 4%. Into again same 99%, 2.33. Okay, so now do the calculations. Get me the answer for bond. So get me the answer. Somebody has got it. Nivetha has got it, I think so. What are you getting it? $200. Let's do it. 200 million means 1, 2, 3, 1, 2, 3, 1, 2, 3 into what is it? 0.04 into 2.33. So I'm getting it as 1, 2, 3, 18.64 million. I'm getting it as 18.64 million. Everyone getting it? 18.64 million. Okay, so I'm getting it as 18.64 million. 18.64 million. Right? And here how much you are getting? 28 million. So who is more riskier? Riskier is Forex. Why? Because 28 million amount is at risk. Here only 18 million amount is at risk. So who is riskier if they ask you? Riskier is Forex. Who is getting more returns? Returns obviously Forex will be getting. See, rule is very simple. High risk, high returns. High risk, high returns. Okay. Now, one more calculation is asked, that is RAPM. RAPM, Risk Adjusted Performance Management. Risk Adjusted Performance Management. So that is what? That is profit upon risk capital. Profit upon risk capital. So profit they will give you in exam. If they will ask you this numerical, they will give you the profit in this. Profit which I get in Forex is something 1 million. Profit which I get in bonds is, let's say, 50 or 2 million. Whatever figures they will give you. Okay. So what you have to calculate now is profit which is given to you divided by this capital. 28 once divided by 28 for Forex, and for bonds divided by 18.64. Whatever is the profit given in both of them separately. Divide bond by bond, Forex with Forex. And then you will decide who is more profitable or where to invest. Suppose example I will give you. Let's take one example. Suppose if I will give you that the profit in bonds, okay, profit in bonds is, let's say, 1 million. 1 million profit. Okay, and in Forex, let's say I'm getting the profit of 2 million. Forex, 2 million profit. Okay, profit. So now if I want to calculate RAPM, if I get this question of RAPM, so what will I do? 1 million divided by 18.64. So now let's do it. RAPM for bond. RAPM for bond. What is bond? 1 upon 18.64. Do it, everyone. 1 upon 18.64. Do it. 1 upon 18.64 million. Million means let's keep this million as million only, M only, okay? 1 upon 18.64 into 100. So into 100. So 5.36% I am getting. 5.3% because both are million, they will get cancelled. So my RAPM over here is 5.36%. Now calculate it for Forex. Calculate it for Forex now. 2 million divided by 28 million, right? So 2 upon 28. Do it. Second one, 2 upon 28. 2 upon 28 into 100. So I am getting it as 7.1. 7.1. Is it right? 7.1%. Are you getting this? 7.1%. Right? So, if you calculate with RAPM now, then Forex is more profitable. If I am the investor, I'll invest in Forex. Why? Because I am getting 7.14% RAPM. It depends on the profit which I am getting. Okay, everything is on the profit versus my risk capital. Okay, this is the second numerical which is asked for this Rarok. Now third numerical. Everyone okay with this? But before going ahead, everyone okay with this? Okay, that we are assuming, dear, 1 million, 2 million we are assuming. In exam they will give you whether it's 1 million or 2 million. They will definitely give you. Okay. Clear everyone? Next. Everyone okay with this? So now let's move on. Where is it? This is the third numerical which you will be getting. Third one. This is the most simplest numerical. 1 mark numerical you will get it. 1 mark. Most simplest numerical. Okay. You will be given profit. You will be given capital. You will be given K also. K's value is generally, this K is generally 0.04. But they will give you an exam. They give you what is K. So all the figures will be given to you. Profit, let's say the profit is again 1 million. Capital, let's say the capital is some 5 million will invest or 50 million. Chalo, 50 million, bigger capital. K is 0.04. So now you have to find out economic value addition, EVA. EVA is asked to you in exam for 1 mark only. So now calculate this, simplest numerical ever. But you have to remember this formula, profit minus capital into K for EVA. Okay, K is 0.04, K is a factor, okay, K is a factor, got it? K is a factor. So this factor is calculated and given to you in exam. Got it? So now multiply this and get the answer. 1 million minus what is this? 50 million into 0.04. What is the answer? Get it? 1 million minus 50 million into 0.04. 8 lakhs. K is a factor to be taken. Okay. So 150 into 50, my God, million is very difficult here. What we'll do is, forget this million. What we'll do, 50 into 0.04. 0.04. So what is the answer? 2. So here I am getting 2, right? Yeah. So this answer I am getting is this 2. 2 million you can call it. 2 million. And here it is 1 million. So my EVA is what? Minus 1 million. EVA is minus 1 million. Economic value addition is minus 1 million. Okay. So this is not at all profitable. This is not at all profitable. So I will not do any investment in this. Okay. Got it? Profit minus capital into K. Remember this by heart. If the profit increases to 5 million, then you are 3 million profit EVA. Okay. So everything, just put the figures and you'll get the answer. 1 mark numerical. It is compulsorily there in exam. Definitely it is asked in exam. EVA. Okay. Now the last part for today. Last part, what did I say? Just now that Forex, no, pre-shipment. Pre-shipment finance. Let's do that. Are you able to see this? Let me see first. Are you able to see it? The screen. Yeah, able to say this, na? Chalo, let's solve this. This is the last numerical for today. Okay? This is the last numerical for today. Got it, everyone? Okay. That is different, Reshma. That is separate numerical. That is taught, that is separate numerical, this is separate numerical. That is annual interest minus operating expenses. That is all. These are big numericals. Okay, this is a simple one-liner. Yeah, that will also come. So now let's solve this. Okay, let's solve this. Received an order of 500 CIF to Australia when USD INR rate, bill buying rate was 43.5. So USD INR rate was 43.5. How much pre-shipment finance will be released? Profit margin of 10%. Insurance and freight cost 12%. Contribution from borrower is 25%. So now we have to find out how much pre-shipment is to be given. Kindly note few points about pre-shipment. Pre-shipment is always given pre-shipment. finance is always given on FOB, free on board. You'll always give pre-shipment in FOB. Okay, what is given over here? CIF. CIF Incoterm. You'll always give it on FOB. Okay, number one. Number two, you will always subtract the margin of the borrower. So here it will be 75%. Okay, here it will be 75%. Now, what have you been given? You have been given CIF. What do you want? FOB. How will you come from CIF to FOB? See, CIF to FOB is like this. CIF minus, pay attention, CIF minus interest. What is this? Insurance. Insurance, I means insurance. Insurance plus freight. Freight. Minus, there is one thing which is still to be subtracted. That is profit. Profit. So then you come to FOB. This is the whole crux of the problem. This is the summary of the problem. Okay? This is the summary of the problem. So, CIF minus insurance plus freight minus profit equals to FOB. Now you have to subtract, get all these figures. Okay? Get all these figures. So what is this? Okay, get all the figures. Now it depends on how will you solve this. Keep it very simple. First is insurance and freight. What is given insurance and freight? Insurance and freight cost 12%. 12% of what? 12% of your value. Okay, 12% of your value, CIF value. So insurance and freight is, this will be 50,000 into 12%. This much will be insurance plus freight. Now profit, what is profit given? 10%. Okay, 10%. Now here is a catch for profit. How will you calculate the profit? See, pre-shipment will be released considering profit margin of 10%. So here in this problem, it's clearly showing that profit margin is 10%. Of what? Of the order value. Directly take the order value, because in the exam they won't confuse you. Actually, profit is calculated in different way. Profit is calculated like this. CIF value 50,000 minus this, whatever answer you get. From that, because after all that is your final cost. From that profit is subtracted. But nowadays in exam, they don't ask you such tough part. They'll only ask you profit is 10% of the value. So directly take 10% into 50,000. So that is 5,000. Right? 10% of 50,000. So now get the answer. What is it? 50,000 minus 50 into 12%. 12 by the 60, right? So 6,000 over here. So 50,000 minus 6,000, 1,000 minus 5,000. So your FOB is what? FOB. That is what? 50 minus 11, 39. So 39,000 will be our FOB value. Getting this, everyone? 39,000 will be our FOB value. Clear? Very important one. FOB value 39,000. Now from this, what is given? Customer's margin is 25%. Borrower's margin is given as 25%. So what will you do? This is your FOB value. Out of this, see, this is means what? This is for manufacturing. Total amount required for manufacturing. The customer wants to manufacture the goods. For manufacturing, total amount required is 39,000. Out of that, 25% is brought by the customer. So what will we do? Bank will finance how much? So bank equals to bank finance equals to 39,000 into 75%. So get the amount. What is it? 39,000 into 75%. So what are you getting? 29 point something, 29 to 50. So 29 to 50. 29, this is dollar, kindly remember, 29 to 50. This is your dollar finance. Everything is in dollar right now. Okay? But you is finance in rupees. You is finance in rupees. So what will you do? Multiply this with the rate. What is the rate given? 43.5. Multiply it. So multiplied by 43.5. What are you getting now? This is in rupees. This was in dollars. So now, what is the amount you are getting? 12,72,375. Yeah. 12.72 lakhs. Okay. So 12.72 lakhs. So 12, I'll just write in short, 72 lakhs. This much will be your finance to the customer. 12.72 lakhs. Some odd amount is there. I'll just write it round. Okay. So 12.72 lakhs will be the finance amount. Kindly remember FOB, how to come to FOB. That's very important. CIF minus insurance and freight minus your profit subtracted, you get FOB. Got it, everyone? Clear the terms? Okay. So now here we'll stop. Okay. So here we will stop, everyone. Got it? So what we'll do now? At night I am taking one Chalisa also. Chalisa, and in the morning I'll be taking one most important paper. Chalisa at night, most important paper. Okay? In the morning. So what you do? You follow all of them, both of them. Chalisa will be some numericals as well as theory. See, I'll cover both numericals and theory. Roughly it will be for 1.5 hours approximately, both of them. Okay. So do follow them without fail. At night, I think so it is at 11. Roughly it will be at 11. Okay. 11 at night, and in the morning at 5:30. In the morning at 5:30 again. So follow both of them. Okay. So everyone, and tomorrow there's a paper analysis. So do come for the paper analysis. Don't miss the paper analysis. I want to know how many marks you got. Okay. And also post the questions tomorrow. What were the questions? Remember them, so that others can also benefit. Okay. Kindly post the questions also tomorrow. So best of luck everyone, and do study at night. Okay. Bye everyone.